Some commentators have, over the years, claimed that the price of silver has been manipulated by the large banks. They were always considered to be conspiracy theory nuts and bona fide members of the tinfoil hat brigade. Well, guess what? It turns out that they were right all along. Their allegations of price rigging were confirmed by Deutsche Bank, who confessed to being involved in manipulating the price of silver earlier this year. Deutsche agreed to settle a case brought against them for $38 million, a measly fine for such egregious behavior. Had they not settled and pointed their finger at other colluding banks, that fine would have been much higher. And as part of their settlement, the bank released 350,000 pages of documents and 75 audio tapes. These documents show there was a silver market mafia of big banks including Deutsche, UBS, Barclays and HSBC all working together to artificially suppress the price of silver and fleece the general public in the process. There's evidence of traders rigging the silver market. Court documents detail private chats between bank traders. The lawsuit alleges widespread rigging of precious metal markets. A UBS trader said, "Avalanche can be triggered by a pebble if you get the timing right." Another UBS trader said, "If we are correct and do it together, we screw other people hard." In the video below, there's a link in the description. Mike Maloney walks you through the historical silver charts and pinpoints the exact moments bank traders colluded together to rig the markets. The evidence leaves little to doubt. But as you learn, there's an upside for silver investors who accumulate physical metals. The timeline Mike referenced in this video was created by Nick Laird at goldchartsrs.com. While this manipulation is a joke to the young, naive, greedy and overpaid traders, it is important to remember that this is not a victimless crime. These traders were allowed to do this by the banks they work for, thereby defrauding retail silver investors and bullion buyers around the world. Check out the description below for links to other videos discussing the silver price manipulation. The important point to remember here is that this involves the smallest of retail bullion buyers, you and me, and investors being ripped off and defrauded by the largest players in the market. Massive banks with massive liquidity provided to them by central banks. It is also important to remember that this creates an opportunity for precious metals buyers, as the suppression of gold and silver prices in recent years means that gold and silver remain undervalued, especially versus the assets that banks and central banks favor: property, stocks and especially bonds. Manipulation is an opportunity for investors as it allows them to accumulate gold and silver at artificially depressed prices. The history of gold and silver market rigging and manipulation is of short-term success followed by ultimate failure and then much higher prices. This was seen after the failure of the London gold pool in the late 1960s and gold's massive bull market in the 1970s. The gold and silver prices have likely been pushed about as low as they'll go. The lower they are pushed in the short term, the higher prices will surge in the medium and long term. So while the bank's criminal behavior may make you angry, and it should, as a result of their actions, now is a very good time to stock up on precious metals and take advantage of those artificially suppressed prices. For more gold and silver news, check out http://www.investingoldnow.com.